in the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
The economy doesn't need a whole lot of help right now. The economy's good, confidence is high.
We still see the underpinnings of this bull market intact. We have an economy that's moving higher. We have inflation that thus far is pretty contained. And a Fed, it's going to be gradual, but they are moving in the right direction.
The Fed never moves in the right direction. Hi, I'm Phil Grande, philsgang.com. My God, the Fed is the worst thing ever. We have to get rid of the Fed. We've tried. It's impossible. The Fed is destroying this country. It destroys our economy. Most people don't even know what the Fed is or what they do. So I'm going to take a minute and explain what this terrible organization is. A bunch of gangsters. And they don't help the economy. What makes a strong economy, remember, is when you have a strong labor market. The stronger your labor market, things go well, because we have a strong labor market. Wages increase much faster than price of goods, especially staples. The most important thing is the labor market. But they don't focus on that. First of all, they're not smart enough to focus on it. They are just a group of dumb people. So let's go back and see what this thing is, the Federal Reserve. First, it was formed in 1913. And the Federal Reserve, the name Federal Reserve tells us they can't be trusted. Think about it. Why would they call themselves Federal Reserve when they're no more federal than Federal Express and they have no reserves? Why'd they choose that name? To deceive you and me. To deceive and to trick the American people into thinking it was part of the federal government so they could get this thing through. That's why they did it. I mean, imagine this whole thing was based on fraud, a crooked name. And that's not a good way to start out. So the group who started the Federal Reserve gives it the Federal Reserve name. They call it the Federal Reserve. And then some of the crooked members in the Senate, they passed what was called the Federal Reserve Act. And the Federal Reserve Act now made it legitimate, and it is legitimate. But just think about it. Started off on a wrong foot already. Started off on being a deception. And the Federal Reserve is owned, everybody asks, who owns the Federal Reserve? Well, it's owned by shareholders, not individuals. It's owned by 7 banks. But only 2 banks really control it. The other banks are tiny. So who controls it? Who owns it? 2 banks. Citi, of course. They own 42%, and J.P. Morgan owns about 30%. So who really is in control? J.P. Morgan, right, and Citi, their CEO, especially Jamie Dimon. Now, think about this. The shareholders, these banks, now they get paid a dividend. And then after the dividend's paid and all the expenses are paid, then profits go back to the Treasury. But there's no profits. They are so bad that they're in a hole by $114 billion. Oh, and that famous FOMC committee that makes all the decisions, all the policies. How could they be making smart decisions for us when they're the Federal Reserve and they're losing $114 billion? That's in 2023. It's going to be even more in 2024. What are you, nuts? Yeah, these are the people who's supposed to be overseeing what we're doing. Yeah, right. Okay. So, and the structure is quite easy. Okay. They have, the Federal Reserve has a board of governors. There's 7 of them. They're appointed for 14 years. The President of the United States appoints them. The Senate confirms them like everything else. 14 years. These dopes are on there. The big thing of the Federal Reserve is the FOMC committee. Now, that's the important thing of it because they're the ones that make all the decisions. So 1.5, okay, of the committee is made up of these governors, which there's 7 of them. The other half is made up of regional banks presidents. So they have like 12 regional banks out there, and the 12 regional banks scattered out the country. They're supposed to bring back information to help make a decision. Do we raise rates, lower rates? But that's where the problem comes. Everybody's talking about raising rates, lowering rates. They take the easy way out. They take the easy way out. The reason why we always have bubbles in the stock market is because instead of doing their job and working hard and create a strong labor market, they just, every time we go into a slump, they print money. They just print money. That's what they do. They print it. I mean, and they print the money, and they turn around and they go to the banks, the big banks, and they say, look, we're going to buy from you the bonds you own. Now you got cash. Think how stupid this is. So they print money, go to the banks, and say, how many bonds do you have? Oh, we have $1 million in bonds. What'd you pay for them? $5 million. They're only worth $1 million? Yeah, well, we'll pay you face value. We'll buy them for $12 million. This is what they do. Now, again, remember, they're not working on the labor market, which they should be. Instead, this is stupidity they do. So they go and they buy these bonds that are worth $1 million. They bought them for $12 million, and now the bank has a value of just $1 million on. They screwed up. Now we come in, or the Federal Reserve comes in, prints money, and buys all those bonds at face value. Not they should only buy them for the $1 million, but no, they buy them for the $12 million. Now, once they do that, once they take that money, buy the bonds, now the banks are full of money. And now they're supposed to start lending. And this is where they get in trouble. Now, what they tell us, remember what they tell us. When you hear about money supply simply means, again, that they buy banks' bonds, and then the bank's supply of money increases, and the banks then lend. But do they? Most of the time they don't. They go and buy more bonds. But they tell us that the money supply is a win for Main Street. No, it's not. It's a lie. It's not a win for Main Street. Main Street doesn't win. Wall Street wins. So, example, when the economy slows down, the Federal Reserve will increase the money supply. Again, buy the bonds, put your money in there, and now the banks have a bunch of money. Sounds good. It sounds like, wow, this is pretty good. Look what they're doing. They're going to make sure the banks have a bunch of money so they can start lending to Main Street. Wrong. They're not there to help you. They pretend that the system is there to help you. They pretend the money supply and the Fed working together to increase this money supply to buy the bonds so there's a lot of cash around so they can lend you. That's to help you. That's to help Main Street, the hard-working guys and gals on Main Street. Help you get a loan. That's what they sell, but it's a lie. That's not what happens. So I'll give you an example. So let's take between February 2020 and today. They increased the money supply by $5 trillion. The market rallied 158%. Wow, great for Wall Street. Remember, outside of 401ks, there's not many people that own stock. Remember, 70% of people are working paycheck to paycheck. They really don't own stock. Sure, they have 401ks, but they withdraw most of the 401k for emergencies. So, yeah, okay, so the market went up. That didn't help anybody on Main Street. Market goes up 158%. Now, here's the problem. So when the market goes up 150%, because the Fed has to print money to go to the banks, use that printed money to buy the bonds, to give them the cash. Remember, that's all printed money. So anytime they increase the money supply by $5 trillion and the market rallies 158%, great for Wall Street, but for Main Street, you get screwed. They screw you. Because remember, the idea of the money supply, which they do not want you to know, is to increase stock prices, asset prices. That's the real purpose. And guess what? As it goes up 158%, what happens after that? Inflation comes right behind it. So in this particular case, from February 2020 to November, where we are today, 22nd of November, the market rallied 158%, right? But prices have increased 30%. So prices for Main Street increased 30%. So how's that good for the economy? How's that good for Main Street? It's a lie. Money supply screws everybody. A very small group of people make money. Remember, only 85% of the people who do trade stocks lose money because they don't know what the hell they're doing. So let's take some reality. So let's take between January 2008 and 2020. So 2008 and 2020, they, remember, printed all this money. Remember what QE was? They printed all this money, about $3 trillion after 2008. They printed all that money for the purpose of going in and buying bonds to get interest rates down, and the Fed dropped their rates down to zero, right? So from 2008 to 2020, January, rates were at zero. So the Federal Reserve increased the money supply by $8 trillion. That's a 100% increase. So the market rallied from January 2008 to February 2020, 140%. But it didn't go up because the economy was doing good. It didn't go up because corporations are doing good. It went up because they printed $8 trillion. So Wall Street gets 140%. They get a big fat 140%. What does Main Street get? The person who working for $65,000 a year has 3 kids struggling. They've already taken most of their money, emergency withdrawals out of their 401k. They have no savings. In fact, if you look at net savings as of today, as a percent of our gross national income, it's below zero. It's a record, below zero. Or savings as a percent of our disposable income is below a record 5%. 401k emergency withdrawals are at record levels. Consumer debt up to yin-yang. Credit cards, 1.1 trillion. Auto loans, record high, 1.6 trillion. Student loans, 1.5 trillion. Bankruptcies, 2023 surged 18%, and 2024 is increased by another 16%. And part-time jobs are exploding. Exploding. Because people can't afford staples, can't afford groceries, can't afford insurance. because the Federal Reserve's not doing their job. Full-time jobs in the past 2 years under Biden and Harris went flat. So where's the Federal Reserve? I thought the Federal Reserve was supposed to take care of that. They don't care. The Federal Reserve works for Wall Street. Remember what I said? Who controls the banks? Who controls the Federal Reserve? J.P. Morgan and Citi. Jamie Dimon controls it. You think he's going to take care of you, or you think he's going to take care of Wall Street? So that's just a rally. That's just one rally. Sure, that was a nice rally if you're in the market, but it's not good for Main Street. Then COVID. Remember when COVID hit? February 2020? January 2020? And then from February 2020, it dropped 35% to March 2020. They kept interest rates. They started to move interest rates up from 0 to 1.5%. Then they stopped. They brought it right back down to 0 because the market collapsed. The market went down another, 35%. 35%. So what are they going to do again? They're going to rally the market. How do they do that? Money supply. You see what's going on here? So this bubble is getting bigger and bigger and bigger. And that's why you should join our gang here at Phil's Gang, so that you know how to go long and short. And check out our chart, the Pro 2 color-coded chart. We made it simple. For 25 years we've been working with this chart. Buy on green, sell on red. It works.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. So, listen to this.
We're only up about 65-70% from the lows. Typically, that means we got about 40-50% to go on average. And so for us, we get in charge, hop in the boat, paddle along with the rapids. Yeah, we might hit a couple swells or whitewater or some chop. Totally normal. Just don't fight this hard current. This river is running in a bull market direction.
What she's saying, as long as they keep putting money in, as long as they keep propping this market up, keep pushing in money supply, don't fight the trend. Exactly right. I tell my members that every day. I point out my color-coded chart, and I show them what we call power stocks. They're solid green. I say, just stay with those power stocks. Don't fight. Do not fight the trend. But what's the trend consist of? What made this trend? Not our economy, because the Federal Reserve doesn't work on our labor. They don't care about the labor market. They don't care if we have a strong labor market. They work for Wall Street because Wall Street owns the Federal Reserve, because there's two banks that control the Federal Reserve, Citi and JP Morgan. They run it. They own it. You think they're going to work for Main Street, or you think they're going to work for themselves, for Wall Street? Of course they are. Now, the problem with this, when you keep increasing the money supply, you keep getting more and more inflation that screws Main Street. But at some point, remember, you can't increase the money supply. And when is that? When interest rates are up. That's right. Now you're screwed. What are you going to do next? That's their problem. That's where we're heading to. So again, if you took the first rally from January 2008 to February 2020, market rallied 140%, prices went up 47%. Take the second rally after the COVID crash from March 2020. So you go from March 2020 to January 2022, we had another big rally. Why? Interest rates were near zero, and they plugged in $5 trillion worth of money supply. This first rally between January 2008 2020, they plugged in $8 trillion. They increased the money supply by 100%. The second rally after the COVID crash, they increased the money supply by $5 trillion. So the first round, January 2008 2020, Wall Street made a bundle, 140%, and prices went up 47% for the folks on Main Street who are struggling. Why do you think we have a record amount of part-time jobs? They can't make it one job. So the second rally after the COVID crash, they printed and put in $5 trillion, pushed the market up 108%. You think that was for Main Street? What happened then? Main Street got rich, but what happened to the folks? Prices went up again, 22%. I mean, people just don't realize what's going on. Now, if you take the sell-off we had January 2022, now remember, from 2008 to January 2022, rates only one time got above 1%. The rest of the time was always near zero. 0.08, 0.65 was always below 1%. Only once in January 2020 we were at 1.58. But they cut that right back to zero the minute that we had the COVID crash from February 2020 to March 2020. So again, when you go from 2008 all the way up to January 2022, it was easy because rates were at near zero. So you can do the money supply. But what good is it? All it's doing is raising inflation. Remember, when you hear money supply, remember what happens. Yes, the stock market goes up because asset prices go up first, which are stocks. But what comes behind it? A wave of inflation that screws Main Street. So let's take the third rally. This is where the problem is. When the market dropped from January 2022 down to October 2022, remember what happened. When that market, that was about a 30%, about a 30% drop from January, let's see, yeah, I got that right, from January 2022 to 25%, thank you, 25%. So what'd they do there? They plugged in some more money, right? I mean, that's all they do. They plugged in some more money. So October 2022, they increased the money supply, get this, by 2%. Oh, that's not much. But you know what that 2% increase in money supply? How much it shot the market up? 66%. 2% increase in money supply pushes up the market 66%. But how much did inflation go up? Another 18%. You see what happens? So here we are today. Now remember, the whole success of this money supply was to stay to have near zero interest. So that was from 2008 to 2022. We pulled back to from January 2022, we pulled back to October 2022, and there's where the problem began. Think about this. Our problem began in October 2022. This thing's falling apart because now interest rates couldn't go back to zero. It's at 3.8 in October 2022. And then the market rallied and kept rallying up to where we are today. We're near 5%. Well, wait a minute. You can't do money supply again because interest rates are too high. Because if you print money, what happens? When you print money, they go to the banks, buy their bonds, so they have plenty of cash to start lending again, inflation goes up. So the problem is they have to keep raising interest rates to fight inflation. That's what they've been doing, right? So you don't have another chance of money supply. You follow me? You don't have another chance of money supply. Money supply goes with zero rates. Money supply is fine as long as you have zero rates. But now we're at 5%, you can't do money supply. So what do they got to do? You're going to think I'm nuts when I say this, but you watch, I'm right. They're going to have to go back to zero rates. They can't do money supply. So what are they going to do? Inflation is going up. We just got the numbers. Inflation's going up. So they can't do an increased money supply to move believe me, they would just keep increasing money supply until Wall Street made all kinds of money, and poor people on Main Street's going to cost them $100 for a hamburger. They don't care. But now they're screwed. Now, what's keeping the market up now is the promise of the tax cuts. Now remember, we went from 35% to 25%, and then that moron, the hell's her name? I already forgot it. Anyways, who's the hell ran for our president? What's her name? What's her friggin' name? Isn't that something? I got a blank. Isn't that awful? I can't remember who ran for president. Kamala Harris. Okay. So Harris, I mean, she had thank God she didn't become president. She has no idea what she's doing. I mean, that would have been unbelievable. So we are going to go back to zero interest rates. And then what's going to happen is inflation is just going to keep going up. That's the problem. They're not fighting inflation. They're not building a labor force. The Federal Reserve is not doing what it's supposed to do. It's there to serve Wall Street, because when you say, who are the owners of the Federal Reserve, just say Citi, JP Morgan, say Citigroup, JP Morgan, they own it. Jamie Dimon controls it with the president of Citi. They control it. So now the problem is, if they have no choice, but they got to go back to zero rates. Now, do we really care? Of course we care, but what do we do here at Phil's Gang? Well, I'm going to show you. At Phil's Gang, we follow the money. That's right, we follow the money. That's what it's all about. Because if you follow the money, and I'm going to show you in 1 second here, if you follow the money, you have and if you use our color-coded chart, you don't care if it's going up or if it's going down. It doesn't matter to you. It doesn't matter. Let me just get my charts here. I mean, it's amazing. We could care less which way it goes. Well, I can't get my, for some reason, I can't get my charts up. I'm trying to pull my charts up here for you, gang. They're not popping. They're not coming up for me for some reason. My show charts right there. Let's see if I can get it. None of them are coming. Oh, here we go. I just got this one up. Okay, good. I got one up here. I think I got the right one. Let's see. No, I got the yeah, I got it right here. Okay, good. Okay, sorry about that. For some reason, I couldn't get my computer to... Okay, so here's what we talk about. Look, it doesn't matter to us if the market crashes, we're going to be shorting the market. And every time they prop the market up, we just follow the money. So we follow the money on the way up, and we follow the money on the way down. Take the stock right here, okay? See what our chart. I developed this chart 25 years ago because it made no sense to me. When you look at a regular chart, and you got to remember, a regular chart. When you look at the candlesticks, right? One day it's red, next day it's green. One day it's red, green. Think about this. That doesn't tell you anything. The candlesticks are like your accounting department. That's right. It's like the accounting department. All it does is tells you what contracts have passed. That's all. What contracts have gone back and forth. That's what it tells you. What you want to know when you look at a stock, like when you get in your car, what's the first thing you look at? Volume, right? Your gas gauge, rather. You look at your gas gauge, right? First thing I always do, I look at the gas gauge just by habit. I look at my gas gauge. It's the same thing when you trade a stock. The first thing you want to look at is your volume. Do you have plenty of volume? Because volume is energy. That's what drives your trend. So if I have plenty of energy, and then my chart will show me that I have that energy has created a trend, an upward trend. Now I go look at my chart. All I want to know is money going in or money going out. So when you put up this chart, the Pro 2, and I remember I designed this 25 years ago, and over 125,000 people like you have used this chart, so it works. So the first thing we always look at is volume. If it's selling volume, we'll short. If it's buying volume, we buy. And then what we look at is what we call a sweet spot. Every stock has a sweet spot. So if you look at this stock here, you can see where the sweet spot is from here to here. See that sweet spot? If you're looking at it now, if you can't, if you're not, it's not going to help you if you're not following me. But the sweet spot has this stock has a high probability of a 13% gain. But I'm not interested in a 13% right now. I want to get the sweet spot. Now, what's the sweet spot? The sweet spot is that place on a chart where the most money comes in at a very short period of time. And what is that? What's that do? Well, when the big institutions short a stock, they have to turn around, and let's say an institution made 20 grand. Well, now to make the 20 grand, they got to buy the stock back. So they buy it back, and that's the sweet spot. And then everybody starts buying at the sweet spot. That's what makes the stock go up. That's what makes the stock go up in that sweet spot. It's almost impossible for it not to go up because, again, it's the most money going into this small period of time very rapidly. Now, you know how they tell you to cost average down? You know why they call it cost average down? Because they don't want you to short a stock. That's why. They don't want you to short. Isn't that ridiculous? So instead, what they do is tell you to cost average down. So let's say you got a stock at $500. Okay? So now the stock comes down to $400. What do they tell you to do? They tell you, hey, guess what? You can have the stock you bought at $500? I can get it for you for $400. Now it drops to $200. Hey, you know the stock I got for you at $500? You can get it at $200. And they think, hey, wow, this broker's really working hard for me. No, they do that because they don't want you to short. Why? Because they don't make commissions when you short. They only make commissions when you buy. That's why they trick you with this, cost average down, because they don't want you shorting. Because they can't make money shorting stocks. They don't get commissions. Go to my site, philsgang.com. Check it out. And follow my picks, my Pro 2 color-coded chart. It works.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to